Yes. So at 11:39, 39 and 11:40, we got two hammers here. As we can see, preceding there is a downtrend. Okay, from 11:13 to almost 11:38, it is a downtrend. At bottom of the downtrend, we have two hammers here. Sorry. Yeah, is the video available now? Can you see the video? Yes. Okay. So as I'll repeat it once again. From 11:13 to 11:38, there's been a downtrend. Yes, I'll repeat it from beginning. Okay. Please turn off your audio. Okay. So from 11:13 to 11:38, there is a preceding downtrend, and at 11:39 and 11:40, we got two hammers. We need to wait. Who is turning on the audio? Please do not disturb the session. Please. This is the last time. Yes. So from here, we need to wait until the next candle closes above the hammer. As we can see, irrespective of color, do not mind if it's red or green. Do not mind. Okay. So from next candle, it closed just above the hammer. As we can see, it's 11:42. There is a candle which is closing above the hammer. Okay. And from 538 rupees, we can open the position here, and we can see the stock appreciated up to 542, almost 4 rupees for a stock. Okay. And I'll repeat it once again. There must be a preceding downtrend. Okay. And the best example is it looks like a lollipop, as we can see it. Okay. The closing price is above or near the opening price, forming a tiny body. Okay. And the lower shadow is at least twice as length of the body. As we can see, this lower shadow is twice as the length of the body. Okay. So how to take the position? Look for the hammer at bottom of downtrend and wait for the next candle to close above the hammer and take a long position. Okay, this is about the hammer. The next is shooting star. That is nothing but inverted hammer. We can call it as inverted hammer also. Okay. I hope everybody can see the screen as it is visible. Like these are shooting star. The same conditions applies here, irrespective of the color, be it green or red. Okay, and it should have the shadow which should be twice as longer as the real body. Okay, now let me show you in the real example and tell characteristics about it. Let me take the example which I have listed. There were very less entry points for this today, as market was very much. Yes. Is everybody able to see the screen? I am pointing my pointer at a shooting star. Okay, we should see that it should precede a uptrend. As we can see, there is a uptrend, and we got a shooting star here. It is also called inverted hammer. Okay, the candlestick, there must be a preceding uptrend, and it looks like a meteor flying. As we can see the meteor flying design here. Okay, the closing price is below or near the opening price. The body should be very tiny. Make sure shadow is double as that of the body. Okay, and it has no or lesser lower body. It should be very negligible. As we can see, it's very negligible. I can give you two examples in this. Okay, And yeah, what are the characteristics? Now how to take the position? We have to wait till next candle closes below the shooting star. That is, it's a short sell. Is it clear? It's a short sell. Okay. And we need to wait till the body closes and we have to take the position. Right? Let me repeat it once again. Yes, I think I will go with the second example now. Yes, we can see this. This is pretty clear. Do not go with the candles like this because the real body is very lengthy. Because we got very less examples today, I am showing you this. Preceding a downtrend, sorry, preceding a uptrend, there is a hammer at the top of the uptrend. We need to wait till next body close below the close of shooting star, and we should take the position in the next candle. Okay, from 588 to almost 585 and lesser. Okay, this is the example of shooting star. So shooting star and gravestone doji are similar, and dragonfly doji and hammer, both all these have similar characteristics. Okay, now let's move on with the next candlestick pattern, that is bullish engulfing. Okay, yes. So as we can see, everybody able to see the screen, PowerPoint? Yes. So the first figure, that is bullish engulfing. Okay. The characteristics are, there must be a preceding downtrend for this also. Okay. And a shorter red candle. Here in this case it is black. I'll show you in the real time chart also. In this case it is black and white, like black be red. Okay, so a shorter red candle followed by a longer green candle. Here we can see the opening of white candle and closing of white candle is greater than that of red candles. Okay, so this is called engulfing. So white candle is completely engulfing the black candle. Okay, I'll show you this in the real time example, then you can get it very clearly. Yes, here you can see that. Is the screen visible? Sorry. Yes, now screen visible. Yes. Okay. So as we can see, there is a preceding downtrend from 1407, that is 27 to almost 220. There is a preceding downtrend. As we can see, the candle at 220 and 221, there is a red as well as green candle. And we can see the green candle has completely engulfed the red one. Okay, the opening price and the closing price are above that of red candle. This is called engulfing. This condition is called engulfing. A shorter red candle followed by a longer green candle. Okay, the green candle opens lower and closes higher than the red candle completely. Okay, this is called bullish engulfing, and we can see we can take the position immediately after that from 182.22 to almost 184. It has gone almost 2 rupees here. Okay, this is called bullish engulfing. Okay, let me repeat it once again. It must be preceded by a downtrend, a shorter red candle followed by a longer green candle. Okay, then we can take a buy position here. Right. So now let's go with the bearish engulfing. Okay, the next image in the PowerPoint, that is bearish engulfing. So yeah, there must be a preceding uptrend, just exactly opposite. There must be a preceding uptrend and a red candle followed by a green candle. There must be a shorter green candle followed by a longer red candle. Okay. So yeah, let me